Good morning. Good morning, everyone. Welcome. Uh, Today, we'll be doing some great lessons today. Guys, unmute your mic. I've got 5 persons on time. Not really on time. You guys are 5 minutes off. That means you're losing. You're 5 minutes off. That means you're losing. If you don't know anything about trading, you have to be on time. 5 minutes, you're off 5 minutes. That's wicked, guys. You're not doing yourself any justice when you can't be on time. You're not doing me a favor when you're not be on time, nor yourself. But I'm telling you, 5 minutes. You're supposed to be in the class for 11 o'clock. And I'm telling you guys it's because you're dealing with trading. Trading, guys, trading. It's 11:06 now. So if you don't get the time right, you're going to be in a lot of problems. I'm telling you guys from now, you need to be on time. Timing is everything in trading. I'm going to say it one more time. Timing is everything in trading. Okay, if you can't manage to come to class on time, it's the same thing. You're not going to be paying attention with your trading on time. Okay, so I'm not trying to be having a hard time on you guys, but I'm trying to tell you that it is what it is. So I want to tell you guys that exists. Okay, I'm seeing it, and what I'm saying to you guys is mitigate it right now. You know what I mean? That's why I'm telling you guys to get a watch, get time going. Now, what we're going to be touching base on is who's on the call. Unmute your mic, guys. I see Tajay, Kim, Latoya, Sheldon. Morning. It's polite to say morning. What's up?
Good morning, sir.
Good morning. Who's on?
Yeah, what's up? I'm here.
Who is here? Sheldon
Sheldon Wright, Front Runner Sports Management.
is here.
Yes, sir.
So, all right, great stuff. So Latoya here as well, and Reed is here. You guys are here?
Yeah, Jadi, you already know. Good morning.
Good morning. And Latoya, you hear me, correct? All right, so for the other persons who are late, I'm not going to be waiting on anybody. We're 7 minutes in right now, and I need to be off the call in 30 minutes. All right, so what I'll be teaching you today is Fibonacci analysis. So we'll be going through the Fibonacci today. So you guys see my screen? Yes, yes, yes. You may want to write it down. We'll be covering today the Fibonacci analysis. So let's get the ball going, guys. Today, very exciting day. You guys hear me clearly? I want to make sure that you guys hear me clearly. Not hearing me?
Yes, sir, I'm hearing.
All right, hold on a second.
I am hearing.
All right, hold on a second. All right, so you guys want to take notes as you go along? I just started plugging my computer. All right, so good stuff. So what we'll be looking at today is Fibonacci's, and what I want you guys to look at right now is how does it work on your chart. So we're gonna be looking at this real quick. I'm gonna show you how you apply it on your chart. I'm also gonna show you guys a little quick recap and to show you what it is all about and how you can actually use it. So let me move this out of the way. The Fibonacci over here. This is over here. All right, so let's get on the show. So right here, we do know that we have 4 hour for as it relates to indication in the market. Where is it going? That's the formula that we use. And we know that we do analysis on a 1 hour time frame. We do entry within a 15 and a 5 minute. We know this, okay? That's how we do it, okay? So I want you guys to bear that in mind and do remember this also, okay? Very important. So entry 5, entry 15, analysis on 1 hour, and we do direction or bias trend, indicate where the market going on a 4-hour time frame. We know this, all right? And so what I'm going to show you now, how do you apply the Fibonacci and what is it all about, okay? Now you guys can follow on your computer as well. And basically Fibonacci is basically ratios between 2 points in the market, and in simple terms is when these banks or hedge funds comes into the market and they do something amazing in the market. Either they bring the market in a bearish trend going down, and I did this morning to show you guys a good example. Right here is a perfect example. Here as well is a perfect example. And here going up as a bullish trend right here is also an example. Right here also is an example. So when you see these big swings in the market, this is how you can actually measure or see the ratio between 2 points and how it actually affects the market. And the Fibonacci purpose is for retracement. You may want to write that down. Retracement, meaning if something is retraced, it's likely to happen again. Okay. So I'm going to show you guys how do you apply the Fibonacci in a market for this. All right. So also you need to look at the players in the market and market structure. Very important. Now market structure will help you guys to actually see where the market is going. And we did touch on market structure last week. We did and support and resistance. Okay. Now as you can see, I'm going to show you guys now how we identify these areas real quick, as we said, and how you can apply these techniques. Now, remember right here, what is this called right here? What is this line called right here? This line right here. This line is known as a moving average.
Moving average.
Right? And do remember that for this example, I'm just going to use one moving average. Now I'm going to use a moving average of
sugar
8 and 13. I'm going to say it one more time. Now I'm going to use a moving average of 50, 13, and 8. All right. For this moving average right here, I'm going to use it. So I'm going to use 13. So you just want to click on the line and you can see right there that is 13, the periods, okay, of the candles moving in within each time frame. Okay. So using a moving average of EMA 13. Okay. Now, also, I want to show you guys this. I'm going to go on our time frame, and you will see here. I'm going to go out in a bit. I'm going out in a bit. Let me show you. Go out some more. Go back in. Pull this up. Let's start from right here. And do remember what we're looking for right now is how the markets go into a trend or contracts and expand. So for persons who can't remember, here's a quick recap. Okay, do remember that the market goes into 3 different phases. It either goes into a contract state, expand state, and then it goes into a trend, right? Okay, so hold on a second. All right, so with this era right here, this right here is known as a, here. This here is known as a bullish trend. It's going up in the market. I'm going to change this area, changes to green. So I want to actually have you guys going into this mindset right here, So let me zoom up a bit. And you'll see this area plays out very nicely right here as it relates to going up. Now, what I want you guys to also
Mommy and
understand,
daddy,
how can you identify these areas?
you need to concentrate.
That we have here, the market is contracting here, expands and going to a trend, expand, contracts here, and contracts mean that everything is on our similar levels. Expand, going to a trend, same thing here. The market expands, retests, and then go into a trend. All right. Now here in itself, what happened is that price affects the market, and this is where now you can see where you are having a lot more buyers than sellers here, and that's what happened here. Let's go over here some more. Now these big candles right here, this is where you have a lot of activity right here. This is known as, when you're using the Fibonacci, you can look at the swing in the market. Okay, so this right here is a perfect example of a swing in the market. Okay, so let's use here for an example. If you're going to identify here as an example, I did use here as an example. How do you apply here? How did you apply here? By using the Fibonacci. Now, as you realize, let's go ahead. So here's an uptrend, contracts. Then it goes
Sir, is
into a
the
trend.
word,
Hold on a second.
is the word, is the, okay.
Just listen for a second. And then it went back into a downtrend. Write down the question and ask me after. Just listen. Now it goes down into a trend. And this is bearish. Okay? Now, here, this is when you have a swing in the market and how you can apply the Fibonacci. Okay? So, for example, you go here, this icon here, click on it, and you can pull it from one area to the next. So you have to actually get the Fibonacci right to really see how it goes. If you apply the Fibonacci wrongfully, everything is going to be off. Okay? So you guys need to know that as well. Very important. So let's see here. As you were saying, Tajay, what was saying?
So I was asking if the word is Fibonacci or Binacci.
It's Fibonacci. Fibonacci. It's Fibonacci. Fibonacci. Basically. Got it?
Yes, sir.
All right. So I'm gonna undo this right here. And I want to show you guys a video on this real quick. Go to a trend line at E, sell. No. Oh, hold on a second. Hey, what's up? Boy, I'm in a class right now, you know. Yeah, I'm in a class right now, so I have to call you back in a minute. All right, man. Thanks. Bye-bye. All right, guys. Sorry about that. So what we got to do is that you pull it, either the market is going to be on a downtrend. You can pull it from the bottom to the top. So as I was telling you, you can actually go here by the bottom and you pull it in whichever direction that you want to pull it. Okay? So you can pull it all the way to the top here, for example, and you'll see the different time frames as it relates to the market. So whichever direction it is, for example, this already gone, so this wouldn't be an area, but I'm showing you guys how you can actually use it to actually indicate, okay? Very important information. And I'm sorry about that, guys, again. Hello, morning. Right, we're on for one, man. We're on for one. It's just like I'm in a class right now, and I don't want to cheat my students of the time. We're on for one. All right, no problem. Yeah. Sorry about that, guys. Today is a very tight day. All right, so do we understand? Please unmute your mic. Tell me if you guys understand. No, you can actually go into...
Sir, I don't quite understand.
All right. Hold on.
Yes, sir. I not understand how you apply the Fibonacci to the...
So right up here at top right here, you'll see the icon with another F. Or you can go here where it says icons or navigation, and you can look and you find Fibonacci.
Okay.
Moving average. And you can look through here and you can find it as well. So I think you go through trends and it should be there as well. But the easiest way to find it is by here, up top, right here. Right? And what you want to do is actually use it to actually project where you're going to go in the market, where the higher time frames are, and where the market will normally retrace where it was before. See what I'm saying? So right here is an example I did before when I put it here and I put it down here. So all this is known as swing in the market and a bearish trend. Okay? Understand?
Yes, sir. Yes, sir.
Okay. So I want you guys to just pay attention to that real quick. Looking for some navigation. All right. So that's how you would actually use it. So you can go to actually insert. So it's actually insert. You can go to insert as well. And you can go down to here. You'll see it. And there are different types of Fibonacci's. Okay. Everybody got that? Interact with me, guys. Come on. Insert Fibonacci, and then you can go to retracement. See it?
Yes, sir. Yes, sir.
Good stuff. So that's how you can actually do that. Or you can see the icon right here. Okay? And you pull it, and you'll see that. So if I take this off, you will see that it's highlighted. So there it is. So I can take it off if I want. Okay? So I can delete it. And I can go here, use it. And this tool right here is to show you how the market moves. Okay? But this is also a channel. So for example, you can see right here is a channel right here. It's a channel right here going up. So you can just touch on it and it will show you, you just click it. So that will show you a channel and you can move it, just click on it and you can expand it or move it around, okay? Whichever way you want to use it, you can, all right? Not showing you guys that today, you guys can look at that. What I want to show you is how we're going to use the Fibonacci to identify areas of retracement. Simple stuff. That's what we want to really stick around, the lesson around. So go back here and you pull it down. So here it is. So you pull it from one area to where the next area you want. And you will see that little red line there that I have. I can move it around and around and around, pull it down to the last point. And each point must touch, right? All the way down there. Now, what are we looking for? We're looking for how the market reacts. So here it is, out here. And if we're going a higher time frame with the 4 hour, you'll see different time frames up here. You can see that, right? So it looks different on a 4 hour time frame on any other time frame. But let's go on a 1 hour time frame. You will see how this plays out right in front of you right here. Now you can edit it by click on it. So you can go on it and you can click it. You'll see the icon, this little icon right here, it changes. Okay, it can change. So when you click on it, you go to Fibonacci Properties, right? And you can click on it and you can change the common. You can change the color from in here if you want. You can actually name it. So I can name it RWT Fibonacci. So I just do Fibo, and I can take this out and I can put in my own retracement, which is 13.333101. That's mine, 133301.
Who is it?
And I can change my style, red to yellow, and I can click
Class right now, though. Yeah, man. Thanks. It's good to see you.
So you can name it. So when you hover it over it, you'll see that the name is changed. Also, if you click on it, you can see that you can actually change or add your levels. How do you do that? Click on add right here, and I can add mine, which is, I had mine before, which is 13, 0.01, 0.013. So these are actually percentage in the market, and you can actually add them right there. Okay, guys need to know that, right? And this is my line right here. You'll find it here. Okay, so also moving to the higher time frames, you will see that right now it's doing all the steps that I show you guys. It is actually contracts. It goes into a trend here. It contracts, expand, go into a trend, contracts, expand, go into a trend again. So contracts here, it goes into a trend here, contracts, retests, go into a trend here. Okay, so you can see all these are known as what? All these areas right here, between here, 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 these between these two spaces, what is this called? Anybody know? I can make it look a bit more bigger. Do you know what these areas are called? These areas are called retracement zones. Okay? These areas are called retracement zones. Okay? Any questions? Do you guys understand? So you can use it in a case where you want to see how you can go into different time frames and how the market actually reacts, right? So you want to look through, you can look through the charts. You can go back here. Same thing here. Look for it. Go through the candle. Let me zoom out for a bit. These big candles right here. See them? Right here. So I could use this area right here as well to identify. Right here. See that? And you could do the same for here as well. So the idea is that market structure, support and resistance is always playing out. And I can't emphasize how important that is. And do remember that we're always talking about how the market moves as relates to um, contracts expand and go into a trend. And do remember from last week, I did tell you guys about um, if you're looking at an area, for example, you want to put, let's put this in here for a second and show you some. If I was using here as an example, and it's very important that you guys figure this part of the equation out. And we're going to use here, I'm going to use this area here. I'm going to start from this candle right here. And I'm going to put a bouncy ball right here. Now remember now the bouncy ball is going between top to bottom. Okay. So if we're looking for this area right here, and this is a bit not so, for an example, so much, because if I look here after this big drop in the market, we should measure this from here, see how much candle this is, how much pip is this. This is about this candle alone is about five to six pips. This here alone, this candle. Now, if you go here and you look at it, there's support and resistance here. And do remember that you will have to see go up, down, up, down. So this bouncy ball would have moved somewhere here. And you notice that this week all the way down to the bottom. So you have to look right through the market and see how can you identify these areas. Went through all of that last week in identifying areas. And the same thing is going to be playing out here. But do remember, guys, this does exist, and that's how you identify the areas here with the Fibonacci, how you can actually use it. Okay. So that will how you deal with it. So here is a higher time frame. And if you gotta look left to know what is going right, go to the left, look what happened in the left, see what happened on the right. Okay, very important. So if you put it this way here and it's going down, you can actually look at it from this perspective. What if it was the other way around, going down, further down? Look at it. What if this candle change here and keep on going down on a lower time frame?
So
what I'm saying
it
now?
means, okay, yes, sir.
So it can break and go all the way down. And remember, it's a retracement to what happened before. You see what I'm saying? Because if you look across right here,
Yeah, yes, sir.
You'll see this one straight line right there. So right here, this would be a higher time frame. Look at it from a 4-hour perspective, you can see it. So you guys can make that decision. So how you want to place it is up to you. If it's going to go down, in this case, it's the market is going down. What levels is going to go down to? If you look from here, see that? So far it went. So the market can go in both directions. It can go up and it can go down, or it can go across. But in this case here, when one point to the next, here to here, and you're looking at the ratio, that is the purpose of the Fibonacci. Got it? Guys understand?
Okay, so let me understand something. Fibonacci technique helps with understanding how the market moves.
Exactly. But it also looks at ratio of how the game is being played by the big banks and the hedge funds. That's when you have a swing in the market, a big swing. As you can see here, these are the big swings right here. Do you see it? Zoom in a bit. Guys, I'm not seeing all these big candles right here, these big swings. Don't you see it?
Yes, sir. We're seeing it.
You guys seeing it? Right here.
Okay, so we look at how the candles go, the bearish and how they look bullish. And the Fibonacci helps to identify that.
No, market structure will do that. Support and resistance will show you that. Fibonacci actually
looks
telling
at the
you
ratio between 2 points and how it affects and how, yeah.
And how price affects and how the market will do a retracement, meaning happen the same thing again in the future. So what I'm saying? So different levels here. And I'm also telling you that right here, this is a swing and a downtrend. So if you guys look at the support and resistance lesson that I did, right, to understand support and resistance and market structure before you're going to attempt with the Fibonacci. Okay? Very important. All right? Everybody's there with me?
Yep.
Yes, sir.
Very important. So you can see the different levels right here. So I'm saying?
All right.
So you can actually look and see what is going to happen in the market. I hope you guys understand. You may want to watch it a few times. I'll upload this video again. For like Sheldon, you have not been at the class for the last 2 classes. And that is why you're asking all these questions like that right now. You know, I need you to actually be at class, guys. I really do, right? Look back at the market structure, the support and resistance right now to actually attempt here at the Fibonacci level. So I'm saying, all right. Pretty much. But guys, I gotta run for a next meeting right now. We got 4 minutes on the call. Any questions, please let me know. And here, as you can see, if I was using this here as resistance and support, I could bring this line up here So the ball keep on moving between. Always remember this, guys. Okay? So you have to look at the time frame. Look on the bottom right here. If you look, you will see the time frames. This is August 19. This is August 20. The reason why I have these lines right here is to separate days. So everything in here is happening in one day. Here is, and I want you guys to really get this, you know. If you look, all this activity here happens on the 19th. See it? I want you guys to see it. This happened on the 20th. See it? This happens on the 21st. That's what I'm saying? Everything inside here. All these activities happening here.
Yes, sir.
And we're looking at this on an hour time frame. So if we look at this on 30 minutes, it's going to look different. Then we have to change the viewpoint. You see what I'm saying? So it look different. So you guys have to understand the time frame that you're looking at to really understand how the activity is moving with all the different time frames. So it's going to look different in all of the time frames, guys. So this is a minute. Right? And I can zoom in. This is how it looks. Totally different. If I switch it up to a minute, 5 minutes, 15, hour, 4 hour. See what I'm saying? I can make it get bigger. Same thing. Here, you just hold the cursor down and pull it and drag it, and you get it bigger or smaller. So you guys have to really go to your back office and really use your MT4. Watch the videos that I put in there so you guys can help you guys to understand. Clear? We're clear? All right. So that's it for today, guys. Go back to the lessons that I did last week, and that is going to help you guys tremendously right now. That's going to help you guys tremendously to understand. But you guys have to go through this process right here to understand what is what. You just have to. So I didn't want to actually not touch on this, but it's there for you guys to actually understand that this does exist and you guys can use it because it's a tool as well. Right? Just play with it. See how it works. Try it. We want to look into how we're going to identify your stop loss, your entry, and your take profit. Actually, I want to touch with you guys on price next. Price on price channel next. Okay? So we left that for the next class. So thank you guys so much for joining in, and go back to the lessons. But this is how we're going to be leaving it today as it relates to the Fibonacci lesson. Okay? Thank you guys so much. See you on Thursday. See you guys on Thursday.